presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
again.
Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for joining in. 3:07 p.m. Eastern Time. We got 1 hour left to go in trading, and let's kick it off with the S&Ps. Negative by 1 point right now. We're trading at 64.70, and as I mentioned at that 3 o'clock update, very little volatility today. Now, we are coming into Friday, Jackson Hole. So Chairman Powell, he is going to be in focus this week as he'll be making his speech in Jackson Hole. We'll talk about that coming up a little bit later. But rates in focus, as they have been for some time, and right now we have a little bit of higher yield. With, as I mentioned at the top of the hour update there, with the 10-year at about 4.33, just like that. A little lower price, higher yield. We're at the top of the range you were at in March right now. But anytime we've approached that 10-year at about 4.2, we've reversed a bit, and we'll see if that continues the trend as we approach Chairman Powell, and that'll be in focus, man. Today is Monday. That event's happening on Friday, and yeah, he has made some headlines in years past. Don't anticipate he's looking to make some headlines right now. He makes enough headlines, I believe, but he can't skirt past it. He's going to be in making a speech, and many times he uses that. But right now, we get the CPI, you get the PPI, and they have a whole another month of data that they're going to get. So I think you'll hear some of that in terms of the data. But boy, those jobs numbers are going to be in focus as we approach Friday. Dollar right now, up 298 ticks, 98.150. You jump around to gold. And gold pulling back a bit to 33.76. We jump over to silver today. Up about 7 pennies, 38.05 for that silver contract. We jump over to copper. And yeah, that tariff volatility, man. Up to 5.98, and you just been chopping around digesting that move. 4.74 for the price of copper. All right, let's talk a little Intel. So Intel, you talk about the ebbs and flows, right? You get the tweet first talking about that the Intel CEO had to go from Trump. Is that right then? Yeah, it had to have been. They were on their earnings as well. Maybe it cascaded a little further. But nonetheless, he's back in the good graces. And to pull it up, yeah, how about a 10% stake for the U.S. government? So it's a 10% stake as part of the government offer to rescue the chip maker, and they need rescuing. They do. Yeah, it looks like shareholders are a little worried about giving up 10% of the company. One option under consideration is converting some of the money that Intel was slated to receive from the CHIPS Act into an equity stake. All right, so expect the volatility headlines to persist there, but not surprising on the heels of NVIDIA, AMD kicking back a portion of their sales, and NVIDIA within about $2 of all-time highs. Let's check out the volume on NVIDIA today. Okay, nothing too impressive. We're at 100 million. You got about 50 minutes left to go in trading, but you did what on Friday? 156 million on Friday. A little bit of selling on Wednesday and on Friday. You zoom in on the action. Wednesday on NVIDIA, a red day. You do almost 180 million. You get a bounce on 130, and then you trade lower on 156, and we're bouncing today. We'll see how the final day hour comes in, but you're not going to beat Friday's volume of 56 million in the final hour when you've already done 100. Yeah, so Palantir. Boy, be careful in some of these equities, folks. Unless you have a plan that you're going to hold this thing for 20 years, you don't want to time it, and I'm exaggerating to a degree. But boy, you've run from $5 almost 2 years ago, right? You had $13 less than 2 years ago to $190 And, when they came out with their earnings recently, right, we were talking about it on the air. They're trading at like 100 times sales. 100 times sales. Sales. They have $4 billion of sales, and they're trading at $400 billion. Yes, the future is very bright for that company. Just pulling up how many shares they have and what their market cap is now. Yeah, still $411 billion. I mean, imagine, they have 2.3 billion shares outstanding. They're only making $2 of sales per share. And they're trading at $175 per share. You're facing a little heat on some of these high flyers. Palantir right now down 2%. Yeah, Oracle was holding up okay. Yeah, Oracle in the positive by 0.8%. Check out Amazon. Quite a run since it's pulled back on the earnings. That was some nice buying power on Thursday on Amazon. That's how you want to see it accelerate. We have closed this gap and we're coming in, and the next earnings event is going to be very important on Amazon. You're looking at an AWS that is far underperforming Microsoft. What doesn't get enough publication, I think, is Amazon and their advertising business, though. It's another mammoth business. And listen, Amazon advertising is not going to change the world the way Azure Cloud and AWS do, and AI and all of that stuff that comes with the data they're building. But their advertising numbers are growing dramatically on Microsoft, and their margins are through the roof as well. Microsoft shares down 0.8%. It's amazing. It's a complete reversal, right? Look at these charts. Microsoft, they crush it out of the park, man, on their earnings, right? They beat everywhere. Azure's dramatically higher. Meanwhile, all they've done is trade lower since then. You jump over to Amazon, and it's the exact opposite. So be careful in both those equities, because that's not acting like you'd always anticipate. That AWS, now Microsoft, Amazon has been underperforming Microsoft. That's part of this relationship going on too. You back up a 3-year weekly, we're not even at the highs we were at early in the year. And meanwhile, if you put it back to last July, we're about 15% above that level, and you back it up even more than that, right? Amazon was pushing $180 in 2020. You're up $50 from there. What is that, about a 28% return from the 2020 highs? You want to see something comparatively? Microsoft is up more than 100% over that period of time. Apple, if you take the 2020, is up 60 or 70% from that time. So Amazon's catching up. I'm not even going to do NVIDIA because we know what they're going to be. Look at them, their 2020 high. Whew. Is that $15 to 180? Man, this market. All right. We'll see if we get some fireworks in the last final hour. We got the S&P's negative by 4. Pretty calm day in the markets. You get the VIX right now trading at 1510. And we'll get some fireworks to our man Steve Rhodes. We'll come back with Steve Rhodes, folks. We'll talk some markets. Don't go away. Be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We get the S&Ps negative by 3, NASDAQ negative by 10, Dow barely red right now by 70 points. And right now, folks, as we do each and every Monday at 3:15, we're going to jump over to our man, Steve Rhodes. Folks, you can check out Steve Rhodes' outstanding daily program, The Trader's Edge, 11 a.m. every trading day, and his daily newsletter, Mastering Probability. Check it out under the newsletter tab. You can subscribe. Folks, we always say you get a 30-day money-back guarantee. If you haven't done it, head on over there, check it out. You can sign up for the 6-month or the year. They all come with a 30-day money-back guarantee. You get some great webinars in as well, and you get Steve in your corner every single day. Steve Rhodes, good afternoon. Oh, I think I got you. Go ahead. There.
Can you hear me? Can you hear me okay?
We got you loud and clear. Steve, how's it going?
Oh, perfect. It's going great. It's a great summer. Hey, look, we got Labor Day in 2 weeks.
Isn't that? It's wild, man. You know what, Steve? They had a Falmouth Road Race this weekend, which is always a beauty. And it's like, man, the summer's flying, because that was almost the end of the summer, and the Labor Day so early this month, this summer. Time flies, as we know, and this market is flying, man. We got
it was flying on Friday, and that's what I wanted to chat with you about, chat with the listeners about, which was last Friday. We finally had the Dow make a new all-time high. The S&P 500, the NASDAQ had done that much earlier. In fact, the Dow, the new high that it put in, the last time that had a high was December of 2024. Most people don't realize that. So we did get to a new all-time high on Friday. However, there's a however here. If we take a look at this set of charts, you'll see on the left-hand side, you see the daily time frame. There's no topping pattern there, but the weekly and the monthly still retain their top out here. The weekly has a sell the D point top. The key number there is 45.016.77. Those folks that are watching us on the YouTube channel or obviously inside the Tiger's Den can grab a snapshot of this picture. These numbers are not going to change. The monthly chart has a Rhodes Momentum Indicator top, and that needs a close above 45.073.63. So there's still tops that are in place, even though we did hit a new all-time high. And again, the daily chart needs a bearish reversal candle. Unfortunately, the other thing, the Dow's new all-time high only occurred in terms of U.S. dollars and Chinese yuan. So this chart here, Tommy, converts the Dow price. So I have it priced in euros, yen, Australian dollars, Swedish krona, the Great British Pound, the Swiss francs, Chinese yuan, and the Canadian loonie in there. And you can see that I've got also trend lines. If you take a look at the euros, we're way away from the all-time high in terms of euros. The same is true in terms of yen. You can see prices rallied right up into a resistance level, a prior trend area. The same thing with the Great British Pound out there, the Swiss franc, the same thing. So we're up at resistance when we take a look at how the Dow is priced in other currencies, and that's really important. It's if we only think in terms of ourselves, well, we're a little bit selfish there, but we're not getting the real picture of the market. Here's an example. The best rallies unfold when price moves higher in all currency of whatever instrument it is that you're looking at, whether it's gold, whether it's oil. In this case here, what I wanted to focus on today was the Dow. This chart takes us back to the 1980 time period and runs us up into the 2000 top. A lot of people call that, the dot-com bubble. What people don't realize was also going on there was money, there was capital that was flowing into the U.S. and out of Europe. And that's shown here with the rise. The chart on the right-hand side is the Dow priced in euros. The left-hand side, just the Dow from back in 2000. So we flash forward to where we're at today. We can see how the Dow, we're up, we're making, new highs, new all-time high out there. But just recently, in terms of dollars, we are not making the rally has stalled, and that's a message. It's a real caution sign out there for us to take, because what this is telling us that the rally is actually more domestic than it is international. And again, the best rallies, Tommy and everybody else out there, are when the instruments are moving higher in all major currencies. Then it is a real party out there.
That not to jump in, that Euro chart is something else, folks. If you didn't check it, go check out the archive. That is an amazing chart that I think nobody knows, Steve. I'm in this market like you every day, and that blows me away, that Euro chart, how far off. But guess what? It makes sense. The dollar's gotten clobbered, man. And so it's just, I think it's great information because it makes sense.
No, it's really helpful because what it does is we're all trying to put the market together. And if we only are myopic and only looking at one instrument, we're really going to miss the picture out there. All the discussion, what frustrates me the most perhaps is all the discussion about tariffs, and nobody's talking about the floating exchange rates we have out there. You can't talk about one without the other out there. So that's a whole nother subject. I don't want to really get into that.
Totally.
But, like you're talking about the dollars, the strength or the weakness. And so you've got to incorporate the whole picture, which is really what I try to do during the Trader's Edge show, try to do with you, doing the newsletter. This chart here happens to be a daily time frame chart that shows the 4 different instruments that I use for tracking the Dow. In the left-hand corner, you've got the Dow Equity Future Contract. That's especially helpful because of just simply having access to so much data. We've got almost 24 hours worth of trading. I'm a pattern recognition trader. More data is better data. If we look at the Dow Jones Cash Indice, which is right next to it, again, no top there. There's no top, by the way, inside the Dow Equity Future Contract. Not yet. The same thing holds true for the Dow Diamonds out there. But when we take a look at the equal-weighted ETF, and as I try to point out to viewers and listeners, oftentimes it is the equal-weighted ETF that is really telling us the story. And the equal-weighted ETF on Friday generated a Rhodes Momentum Indicator top, and today it's going to go ahead and form a TD9 count top. Now, Friday's Rhodes Momentum Indicator signal, Tommy, a close above 39.28 will negate that signal. Doesn't matter. You'll still have a TD9 count top. So the equal weight right now, until we get rid of no tops, until it negates those signals, another reason to be cautious. And it's not just the equal weighted ETF for the Dow. I know that's been my main focus here this afternoon, but this shows us the equal weight for the S&P 500. That's the center one, RSP. And then we've got the QQEW on the left-hand side. That is for the Qs out there. We know we're at new all-time highs for the Qs, but we've got a TD9 count daily top inside the QQEW. We've got a Rhodes Momentum Indicator top inside the equal weight for the ETF. So the equal weights right now are flashing a sign to be careful. Not that these can't get negated. They obviously can. But we've got caution signs out there. And so it's not just looking at even international markets or how things are priced in currencies. It's trying to understand even how our markets are priced with these equal-weighted ETFs. And they're really helpful, and I suggest that people take a look at it. Nice. Lastly, this is a chart of the Dow. For a weekly time frame. And this uses a lot of Bud Rolf's tools. This shows the horizontal trading ranges. Those are the green lines that are going across. And then we've got the diagonal price channels out there. And what we can see is price right now is up against a diagonal price channel. The interesting thing here, Tommy, is the price channel that I drew in was off of the 2009 lows to, capturing this first area out there.
I love it.
And once you capture that first area, you just are multiplying the exact same distance to get those other price channels.
You can see how cool it is on that chart, Steve, right? It is. I love it, man. Totally.
It's nothing that was like, it was nothing like, tried to force it or anything. It just is the way that it flows. And if we take a look at, this is I apologize, this is actually a monthly chart for the Dow, but this is now the Dow's chart priced in euros again. And so we can see how this is actually sitting right here at 38,601. That is a trading range boundary line. So we're up against resistance inside the Dow. I just wanted to point that out to you. Seasonally speaking, during a post-election year cycle, we typically top around August 2nd. This is 10 days away. We're still inside the range, I believe, and then we head lower into the November timeframe. We don't follow this analog pattern and we start busting out to highs, then we probably move higher into the beginning, first week of September, Labor Day.
That was some great information, man. I love the seasonal aspect. It would make sense. I love how just it makes sense so much anyway. It's election, right? You come in with all that acceleration, the momentum, you make it through the summer, and then it's like, whoa, where are we now, right? And here we go.
Absolutely.
Steve, great stuff.
What we want to tell folks is just simply there's a yield sign, there's a caution sign. Just time to be careful.
Get in there for Mastering Probability, folks. Check out Steve's newsletter. Steve, we look forward to the show tomorrow, man.
Thanks, Tommy.
Thank you. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. So yes, Novo. And, I saw Ozempic. I thought it's Wegovy. It's both of them. They have their sister drug as they are partnering with GoodRx. Sorry, a little funky there. And they're going to offer Ozempic's and its sister weight loss drug, Wegovy, at the same price at pharmacies across the U.S. Jump over to those. And I imagine, folks, this is something, and I don't have any experience with it, but if anybody does in the YouTube Tiger's Den or just the Tiger's Den, is this type of deal that you just go in there and you can get a subscription? And I say that as in that they're providing the doctors, and it's a somewhat pretty reasonable as long as you're not skinny and unhealthy, and hopefully to that degree that you can get a prescription for this, because you need a prescription. I imagine it's probably pretty easy, right? Yeah. And it should be. Listen, there's no, it should be. We're all making choices, right? Yeah, but $4.99 a month, about half its U.S. price. And there they are, up by 4% today. All right, you got it, Matthew. Let's take a look at Adobe. So, we're up by 0.5% today. Let's take a look at this volume. Boy, you drive down to 340 with all that volume, and since then, look at the days of conviction on this. Yeah, I don't think I'm buying it just yet. And, the other thing, sometimes, those great charts that Steve has, sometimes it's not a science, it's an art, right? If it was a science. But we got a little bit of a downtrend channel right now. Let's at least make sure we break above that. Maybe we get a nice sign of strength with some volume right now. As you take a look at this chart, man, the only thing I'll say is, yeah, you're trying to break above it right now, but matching up the two previous highs we had, and you look where the volume is. Now that's on a daily. Let's take a look at a weekly. Yeah, that bounce last week was on lighter volume. Let's see, did we make a new low? You had a low out here at 332. We did. We made a new low and rejected that low. Well, we didn't do it on volume. Right? The last time we had that bid, that was the April lows. That's right back where you are right now. Let's back it up even further. A monthly. Yeah, I don't know. This is where I'm looking for the lows of 2022. I think I'd be a little bit patient here. And this is one of those scenarios, right? So what are you thinking about doing with this, Matthew? You're looking for a long-term investment play, you get in here and you hold it forever, or you're looking to catch a falling knife to a certain degree where it's down from 600, you're trading at 356. Because the reason why I ask is if you're looking to hold this thing for the longer term, right, and you think that it's undervalued at the 356 area versus the 700 you had in 2021 versus the 640 you had earlier this year, then I tell you, you could always scale into it. Because if that's the place you're going to get in, right, and you're going to be in there for that long, it'd be unfortunate to miss that entry over that. You decide how much you want to get into this equity. You enter half of it now. You look for the pullback. If it's not there, you enter half of it again in another 6 months or in another year, and you price yourself into it. Because that's the worry, right? You want to get into an equity. You've pulled back sharply. You're looking for a bounce. We have bounced from the lows last week. Okay, this equity is already up almost 10% off the lows, so that's real. But on a shorter term basis after that, I'm looking for a little bit more volume right now. Because this has got some quality volume to the downside. You look at how this went up from July 16th to that high of July 24th, vapor thin volume, right? Volume accelerates on the trade lower. And even on the way up, the big days are not as big as on the way down. So I'd be a little careful on that trend line. Keep your eye on it and look for a big sign of strength. You're getting above this huge day when you had, any day on this downward. July 31st, August 1st, and August 4th. You've done more volume than you have in the last 4 days. All right, Apple shares down by 0.1%. Amazon holding well, slightly in the green. Tesla shares under some pressure this morning, but they got it all back. Up 1.3% right now. Yeah, so you were down to $326.99. You're up to $335 right now for Tesla shares. Palantir bouncing a bit. Speaking of chips and Intel, NVIDIA. Can't stop NVIDIA, man. Up by a full percentage point right now. AMD down by 0.8%, okay. And then, yeah, Intel in focus, but they're going to have to give up 10% of their company. Everything in play right now, all right? All right, and of course, the other thing you have going on is quite the summit going on with the White House. You have Trump, you have Zelensky and the European leaders. And, I was watching some of the Oval Office before I came on when he was just meeting Trump and Zelensky and presser. Yes, definitely a better press conference than the last time. And let's hope for the best, see what happens. And you may get a trilateral, as they were talking about, between Trump, Zelensky, and Putin. See how it goes. Speaking of Russia, we jump over to crude. Down to $61 and change this morning. Just crude under constant pressure, man. Looks like we probably got some more room down to 60. That's where we've bounced recently, earlier in the year. That's your weekly. We take a look at the daily. Maybe we're getting a little bit of buy-in today. We're rejecting the low, but boy, crude under pressure for the last 18, 19 days since we're above 70. Jump over to the dollar. July, what was remarkable was, I remember reading the articles because it said something like up the most ever in such and such period of time. And it was the July articles, and it was written July 31st. Talk about cherry picking, okay? And I said to myself, man, they're really like going gangbusters here, but they were like up the most since this, that. And in my head, I was like, up the most, I guess. On June 25th, we were at 98. And on July 29th, we were at 98, right? June 25th, we're at 98. July 29th, we're at 98.50 or whatever it is. But you start out July 1st, you were at 96.37, okay? And the month ended with it at 100, right? And it was literally the cherry pick low and the cherry pick high. You got all these headlines. And I said to myself, man, those data points are not representative of the pressure this is under. You're in a consolidation, you're bumping up against the 100 point, but to say it has the best July, it's just how the months got picked. And sure enough, what happened? Yeah, it was a cherry pick low, cherry pick high. The dollar's under pressure right now. And that was some great charts from Steve Rhodes, man. Yeah, you just had the dollar go from 110 to 98, folks. 110 to 98 this year, right? More than a 10% loss in the buying power. You better believe equities priced in these weak dollars better be higher, which is what's happening. Stay tuned, folks. S&P's off by 1. Coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&Ps, very little volatility today. As we inch towards Jackson Hole with Chairman Powell on Friday, that'll be the main event today. Then we jump over to yields right now, the 10-year. Yeah, no real huge reaction. As I stated, you get the 10-year. Let's go back to a daily. Every time we bump up against that 4.20% area on the 10-year, we've rejected it. A little bit of lower price, higher yield today. And let's talk a little bit of munis, talking about yield. Now, this one, man, talk about an acceleration. This one out just in the last 10 minutes, this thing popped up, this article, okay? Check this out. Muni high yield ETFs, $1.5 billion inflow. Now, this was a rebalancing of one person, it looks like, or one fund. The Capital Group Municipal High Income ETF had an infusion of $1.54 billion. CGHM. Well, somebody's diverse. CGHM. See what this is. Yeah, there it is. Capital Group Municipal High Growth Fixed Income ETF. The fund is, the fund invests in fixed income markets, primarily invest in debt securities rated BBB plus or below. It invests in securities in varying maturities. Fundamental analysis to create its portfolio. It was formed in 2024. As far as you go back? It is. So it goes back to June of 2024, and it's actually in a losing position. Now, check this out, though. This one fund had $241 million of assets on Thursday, and a day later, they have $1.78 billion. Somebody parked $1.5 billion in this ETF. Yeah, I'm pretty sure that the ETF probably got a call prior to this happening when they put that type of money in there. More than 7 times the next largest gain among fixed income ETFs. Yeah, and that's what it looks like on the chart, which is just bonkers. This thing's been growing assets. You started at, what, 20 million? Look at the slow, steady climb of assets of this thing. And then kaboom. Significant one-day inflows amid an asset allocation shift from equities into long-term municipal bonds. Yeah, I'd say so. The big addition comes as junk-rated munis have been having a rough year. The sector's down 1.6% this year, while the broader muni market is roughly up 0.1%. All right. Makes you want to watch those markets if somebody's putting that much money into that away from equities right now. That's what you call a rotation, folks. It'd be pretty wild if we get one of these roller coasters again. It's amazing how often we've thought this is definitely the time that they're cutting and it's done, right? And the PPI's spooked again. Yeah, you could say it even started in 2000. Man. It's pretty remarkable that we're at a higher yield point now than we've been many times this year. We're well below, because higher price is lower yield, okay? So lower price is higher yield. So we're at a much higher yield than where we were in September last year. We're at a much higher yield than where we were in the beginning of 23, and we're at a much higher point from where we were in 2023 when the market got ahead of itself again. And then you really woke up to the premise that we're going to be lower for longer, higher for longer, and the market drove down to that area in 2023. And that correlated to this run when you had the S&Ps at 6,400, and here we are 2,000 points later. 2,000 points later. All right, let's look at the banks. Bank of America, nice little action today, up by 2.1%. Wells Fargo up by 0.5%. Citi up by 0.6%. We check in on the home builders, giving back some of those. So interest rate, they're just primed, man. You ever get that reckoning and they thought they were out of the gate? And, you know, the buy might be on a pullback here on some light volume, folks, because they had some volume on this move. Look at Lennar on a daily, right? August 13th, that huge expansion. But guess what? Then you get the selling. CPI, PPI, pretty much. KB Homes, off of the lows of $49 or $50 earlier this year. We're trading at 62 right now. A little bit of a give back, though, as yields have risen yet again. DR Horton, really out of the gate, man. From 115 to 165. Strongest day was selling, though, on Friday. Look at that, right? Big day of volume, August 1st. Look at these. I really like the action on Lennar right now. That was a big day on August 13th. Traded lower, but not with the volume. You're testing the high that day, 130. You're at 131.67 right now in Lennar. All right, yeah, let's take a look at VGZ. So, quite the pop, up to 127. But boy, you've done it again, right? Ugh. You know, this is one of those plays. If you're trading it, boy, you better be careful when you test this high. Okay, now, the one thing I want to say is, this was ramping up the whole time with volume, and you did it with volume here. Okay, you did it with volume the last time too, and then boom, you fell out of bed on June 4th for no reason. Couldn't even find selling on that day. No, was that the day? Hold on. Yeah, that was the day. Yeah, man. It's 2.5 months ago. You know, that's the risk on this equity, if something like that comes out. longer term, this thing keeps showing strength, and it does it on volume. This is not some fake acceleration here. And there is going to be pressure eventually down the line to cut. And yes, when you're cutting rates, you're going to get a weaker dollar, okay? And that is going to help gold. So longer run, yeah. But, getting into this thing right now, well, longer term, you're going to own this thing, you're going to stash it, just stash it away. Shorter term, you just did a 1 to a 1.618 expansion, and we got a double top right now, right? You'd have to take this out on volume. On volume on a weekly basis, that's 6.7 million shares. You did it. You did it Oh, did you not? We'll finish this up. No, you didn't. You didn't do it. We'll finish this up. You just missed it. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yeah, just to finish up with Vista there, sometimes it's not that complicated, as in, boy, you come up to that same area, we reject it, look for it to break it through that area. You're breaking right back to $1. And boy, it is pretty wild when you look at the acceleration you got the week of May 19th, 6.7 million shares. Okay? You close at 123. Last week, you close at 125. Yeah, and you do just under the amount of shares. Not quite what you needed, and you're trading lower a little bit today. That's price and volume right there for you. All right, let's talk a little Nike. So Nike shares up by 0.7%. Yeah. And then, it's great stuff that Steve was drawing there, folks. And sometimes, draw those channels, because the more you draw them, you'll see that, it's remarkable sometimes how longer term channel lines, like, Mickey D's is a good example, man, right? It's just amazing sometimes. I bring those up. TJX. Amazing. But on the flip side of that, okay, sometimes you'll have a breakout. Many times the gold stocks have done this as well. Nonetheless, you get back to Nike right now, downtrend channel, but you may be breaking up. Okay, you look at this, it goes from the highs, it goes here, you break out, you come back, that consolidation throughout, but we're breaking higher by 0.6%. That's your monthly. You go back to a daily, and the only worry there is look at that volume at the lows on the monthly. You take a look at the daily, they gap higher in their last earnings, we're coming up. But you take a look at Foot Locker, and yeah, now Foot Locker has been purchased by Dick's Sporting Goods, if you recall, for $2.4 billion, okay? But what they're talking about is, guess what? Foot Locker, they're positioned in Nike. They're in the lead column. Yeah, that's got to be a big one, man. Those two intertwined. We've seen the pullback. But yes, the companies are mending ties after Nike heavily pulled back from Foot Locker under its previous CEO in order to prioritize its own stores and online lineup. They were once 75% of the total store. It's a Nike store. It was 75%. Folks, thanks so much for tuning in. We got the S&Ps positive, just like that. Coming in near session highs. S&P's up by 2 right now. Have a great night. Have a safe night, folks. I'll see you back here at 9 o'clock tomorrow morning for the morning market kickoff. Have a great night, everybody.
Building